All right, people, before I start this video, I'm talking about the liquidity risk ahead of us in 2022 and what is a good thing for AMC and GameStop and all the other meme stocks. Let's first check the status of the covering process that started after hours today. All right, so AMC, I posted a video earlier. Oh, look, wow, almost 10% and on the way down, but at some point it was at what? It was at 15%. Even a little bit higher than that, 15%. Now, let's check GameStop. GameStop, what do we have at GameStop? Oh, 29 freaking percent. Wow, what is happening, folks? And now Koss Corporation, almost 10%. And then we have Bed Bath & Beyond, almost 5% on the way down, was higher than that. So, yeah. It seems like, somebody is covering or starting or trying to cover at least. But as everything in AMC and GameStop, let's see how it holds not only after hours today, but more importantly, tomorrow pre-market and during the trading session, because there are a lot of shenanigans out here. But it doesn't surprise me. You know why? Sorry. It doesn't surprise me a bit because we have a liquidity crisis coming, and it's have everything to do with the cheap money policy. The central bank said, hey, the party is over, folks. The party is over. It used to be money out. Now it's gonna be sucking money out, like sucking air, out of water. So based on this, I'm not surprised because you're seeing a lot of hedge funds are now like in panic mode, and you know why they're in panic mode? You know why I know? Because look at the major indexes. Look at just the market. I mean, one day, the Dow Jones today, at some point was downward close to 0.5%, losing almost what it gained so far this year. Same thing for the NASDAQ, and even true for the NASDAQ. I know at some point the NASDAQ was at over 16,000 points earlier this year. Now it's barely hanging at 15,000. Look at the last 5 days. Look at 5 days, 4%. If you take the last month based on where we were, at the high here, almost 5%, because these hedge funds are heavily invested into stocks, into tech, because since 2020, it started with the COVID stocks. People were staying at home and they were buying Netflix because, they bet that we were going to chill and flex. All right. So buy Microsoft, Apple, because everybody was trying to buy a computer, a laptop, because everybody was studying and working from home. So all of these things, the Facebook, the Apple, etc., they were flying high and high and high in 2020. 2021, the party continued because the Fed said, hey, this is free money. You want to go invest? You want to go and take some bets? Here is free money. But instead of taking that free money and doing what was supposed to be natural and logical traditional investments into companies that are going to, make money, they went on and bought a bunch of those stocks that are not making enough money yet to be that much, priced. That's why we say tech stocks are overpriced. But not only that, hedge funds started shorting companies that they believed were to go bankrupt. But it's not because the pandemic came here that's going to mean the end of the world, because almost 2 years after, we are still here. AMC is still here. GameStop is still here. Koss is still here. BlackBerry is still here. Bed Bath & Beyond is still here. All of these companies are not only trying to survive, but they are now thriving because there is a new management. There's a new strategy. There is a new income stream. There is a bunch of new stuff that these companies are trying to do in order to keep the course. And that's why these hedge funds are stuck. But you know what the reality is? The reality that they don't want you to know? It's that last year, they shorted so much. They went so much against what the market was doing that so far this year, by the December 31st, they did not make that much money. All right? Because here is how it works, folks. If I give my money to a company, to a firm, to a boutique, to a hedge fund to manage, at the end of the year, they have to prove me that they made more money than if I was just to take that money as an average Joe on the street and dump that money into an ETF as a traditional and classical investment. But last year, they had an average of 8%, 8 to 10%. Only two major hedge funds had gains that surpassed the S&P 500. And last year, the S&P 500 made what? 28%. Yeah, let's look at December 31st here. Yeah, December 31st. If you go back all the way here, if my mouse allowed me to do it, yeah, the market made, the S&P 500 made 24%, all right? 24%. So 24% and 8%, that is 3 times. So they didn't outperform. They didn't manage the money and bring additional extra potential or outperforming returns, because if you took that money and you put it in an ETF or just a classic mutual fund following the S&P 500, you would have made 3 times the money that those hedge funds made. So I guess the question is, who is really the smart money? Is it you and I as retail investors because we believe in companies that we know are quality companies, even though the stock price is not fully reflected? Or is it the hedge fund, which is supposed to be the smart money with the big pockets? I mean, the numbers and the facts are there. It is not the hedge funds. And there are two bossy. They are too proud to admit that, and that's why they would not let go easily on some of these stocks like AMC. Because you know what? The season has changed, and I mentioned that yesterday on one of my videos. The season has changed and there is a new cycle away. This new cycle is marked by what we call no more cheap money. Cheap money is dead. The central bank said the party is over, folks, and that's how now there are total panicking and selling of crypto, selling of tech, selling of everything that's have to do with growth, because growth sectors, growth stocks are those companies that are not really making that much money that sustain the stock price. All right, like if you take some of the EVs, they are way overpriced, according to my personal opinion, at least. Now, as we are getting into 2022, we have 2 main things ahead of us. As I mentioned, no more cheap money. All right, because since there is no more cheap money, no more money to actually use in order to give collateral, plus the paper, the bond that these guys invested into China property is also fading away and going close to zero. So they are really cornered at this point. But the other point is also the fact that interest rates are increasing. It's not a question of if. That's why this whole market has been selling off since a couple of weeks, especially the Nasdaq, because the Fed said, hey, in order to fight inflation, we need to increase interest rates. And that's the job. That's something what was expected to come. But it seems like it came earlier this year rather than they expected it to be. So again, it means party is over. And since party is over, they are all in panic mode. And this panic mode might push them into doing stuff that will result into what we're seeing now after hours with AMC. Doing dumb stuff, emotional stuff, because they want to squeeze as much money as possible before actually getting out of this play, because it is not working out. I mean, look at how many hedge funds have closed doors since 2020. Look at how many hedge funds are now returning money to clients. Look at how many hedge funds are now closing down short positions, short selling strategies, and are going long, meaning we're going to buy. Instead of short selling, we're going to start buying. It's because it's not working, folks. They lost. They didn't make as much as the S&P 500 or the market overall in 2021 just because they were not following the trend of the market. They were against the trend of the market, and that's why it's going to be tough for them, because clients are going to be like, you know what, for this year, let me do it on my own, or get to somebody who actually do it. The only 2 or 3 hedge funds that had significant gain on the 2021 year in terms of performance were those who had on their books, meaning they bought AMC and GameStop. That's it. AMC and GameStop. And that's why you see now that it's no way around it, folks. Don't look at the price. The price is totally fake. The price is totally unrelated to the reality of things. Look at what is happening behind the scenes. And we're going to talk about it in a separate video later today. But the fact is, even though the share price is tanking, even though the share price is low, even though this is $70, it is still not revealing the amount and the potential of when this thing starts reaping, when they start doing what they're supposed to do, because there is no way around it, folks. Simply, there is no way around it. So I guess it's just a matter of time. Let's just be patient. All right.